Brian.
Thank you, Caroline. Reuters was reporting that there is a letter that is meant to be sent to other countries, which would give these countries a deadline of Wednesday to produce their best offer on the trade matter. Why does the administration feel the need to send this letter? And I have one more follow-up on trade.
Sure, I can confirm the merits and the content of the letter. USTR sent this letter to all of our trading partners just to give them a friendly reminder that the deadline is coming up. And they are in talks. Ambassador Greer, Secretary Bessent, Secretary Lutnick are in talks with many of our key trading partners around the globe. As you know, Brian, I know the Wall Street Journal has covered this quite heavily. And they continue to be engaged in those discussions. And this letter was simply to remind these countries that the deadline is approaching and the president expects good deals, and we are on track for that, I will emphasize.
On the trade side, though, when the deal with the United Kingdom, there was this idea of a reprieve on the auto tariffs. Is the president looking to do another similar deal on the sector-by-sector reduction in tariffs, or is this more going to be deals related to the reciprocal tariffs that were announced months ago?
Well, as I've said previously from the podium, and the president has discussed as well, each country has unique advantages, unique challenges to it based on their markets and what they export to us and what we export to them. And so that's why the president smartly advised his trade team to engage in tailor-made deal-making. And we saw that with the United Kingdom, and we will see that with other countries as well.
So we've been listening to part of the White House briefing there. Questions just wrapped up also about a letter that was sent to trading partners as a friendly reminder that the deadline was coming up to make these deals with the United States. Caroline Levitt says they are on track for good deals.
We are tracking more news related to President Trump's trade war. He actually got an unexpected boost as he now doubles down, and we have confirmation of that letter that was sent to trading partners. A friendly reminder, as Caroline Levitt put it, of the deadline for Trump's tariffs to kick back in. The number of available jobs actually grew in April, even as economists were predicting those numbers would fall again for the third straight month. CNN's Matt Egan is here to break it down for us. So, Matt, what does this say about the state of the economy?
Well, Boris, this paints the picture of a resilient jobs market during the month of April, despite the trade war, despite all the confusion over tariffs. Workers are still very much in demand. Those help wanted signs are not going away, at least not yet. This report showed that the number of available jobs in April increased from 7.2 million the month before to 7.4 million. This is obviously very encouraging news for everyone who's unemployed and they're hunting for a job, for people who just got out of college, where we know it is a very tough market in terms of entry-level jobs. It's also good news for everyone who has a job, but they want to upgrade to a better job. We also found out that hiring unexpectedly accelerated in April, increasing by almost 170,000 versus March. So this suggests that despite all the turmoil on Wall Street, despite all of the chaos over tariffs, businesses were not hunkering down in the month of April, and that is very good news. As far as where the job openings are, we're seeing an increase in openings in a number of different sectors, including arts and entertainment, retail, healthcare. This has been a very strong area in terms of job growth. One surprise is, look at this, the federal government had an increase in job openings, and that, of course, is despite the fact that DOGE has been trying to take an axe to the federal workforce. Now, there were declines in job openings in a number of key sectors, including accommodation and food services. That's restaurants and hotels. That's something we should keep an eye on. State and local education, finance and insurance. This is significant. Manufacturing saw a decline in job openings in April, and that is despite the fact that that is the sector that the president is trying the hardest to prop up with these sky-high tariffs. Now, despite the overall positive headlines here, there were some signs of caution that we should keep an eye on. Layoffs did increase significantly, and also quits. They fell sharply to the lowest level so far this year. That's something that we watch closely because the number of quits is a sign of how confident workers are about being able to get a job elsewhere. The big picture, this report points to a jobs market that is still holding up. Like it's not collapsing as a lot of investors had been worried about. But Boris and Erica, I think the focus now shifts to Friday's government jobs report, and that should give us an even clearer sense for where this economy stands.
Yeah, absolutely. Matt, appreciate it. Thank you.
Thanks.
Another new report out today is actually raising some concerns about the impact of President Trump's trade wars. The Organization for Economic Cooperation and Development says America's GDP will likely shrink from 2.8% in 2024 to 1.6% this year and 1.5% next year. Forecasters predict that Trump's trade war poses risks to global GDP growth as well and risks fueling inflation. To take a closer look at what this means, senior columnist for Yahoo Finance, Rick Newman, joins us now. Rick, it's good to have you here. So this feels like a bit of a mixed bag today when it comes to economic data. We've got job openings up, right? But some layoffs as well, as Matt just laid out. And then we have this GDP outlook, which is not great. Does it give you a clear reading of where the U.S. economy is right now? What does all that data tell you put together?
No, it's very foggy where the U.S. economy is heading. And guess what? It all depends on one person. That's President Donald Trump. So I think what those job numbers tell us, and by the way, those are job openings. That's not the same as hiring. We're going to get, as Matt Egan pointed out, we'll find out more about hiring on Friday. As a lot of job seekers know, there are some phantom job openings out there. There are these jobs that are listed. Companies kind of feel like if the perfect candidate comes along, maybe I'll hire that person, but the perfect candidate doesn't come along. So some of those jobs just stay there unfilled. But what the OECD said is they expect slower growth for the United States. That's in line with what dozens and dozens of economists have been saying. And again, it just all depends completely on what happens with Donald Trump's tariffs. I mean, he has threatened worse tariffs than he has actually imposed, but he has imposed some tariffs. Those tariffs are going to raise costs, and those higher costs are going to slow down the economy. They're going to slow growth. They're going to slow hiring. They're going to push prices higher. And nobody knows how far he's going to go. So I think one thing that is definitely happening is a lot of companies are just on hold. They are not necessarily hiring new people, but they're not firing people either, because maybe the economy will turn out better than expected. We just need more clarity about what Trump's going to do with his tariffs. And I'm not sure we're going to get clarity. I think Trump likes being able to threaten tariffs like Zeus throwing a lightning bolt from the top of the mountain anytime he wants.
Well, look, the president has said repeatedly, through both terms, I should point out, he likes that little bit of uncertainty and unknown when it comes to any deal because he looks at it as a way to do negotiations. Obviously, I'm paraphrasing there, but the president does see it as coming from a point of strength to keep people guessing. I do want to ask you about, so again, this was just confirmed in the White House briefing. Reuters had first reported on this letter that was sent out by the U.S. Trade Representative to a number of countries, saying that basically we need your best and final. It's like a real estate transaction. We need your best and final by Wednesday as they look to move these deals, any deals, along. Caroline Levitt saying, yeah, this was just a friendly reminder that that July 9th deadline is quickly approaching. How important is it to get a deal at this point, not just for the president, but because of all of this uncertainty?
It's not a deal. It's dozens, like literally more than 100 deals. So that's referring to the so-called reciprocal tariff that Trump imposed on, I mean, honestly, like every country in the world on April 2nd. Then he withdrew most of those on April 9th after the markets tanked. And that July 9 deadline, that's just Trump's own deadline. That's arbitrary. He put a 90-day deadline. He wants to hear from countries. And after he hears from countries, maybe he will go back and reimpose those reciprocal tariffs. Maybe he won't. Maybe he will create a new deadline. So that July 9 is the day we're all looking for to see what do these countries come up with, but really what does Trump do in return? Are we going to get back to those, much higher tariffs than we have now? Is it going to be country by country? Is it going to be product by product? Is anybody ever going to be able to figure out exactly what's going on here? So Trump may like uncertainty, as you mentioned, Erica. Businesses hate it. And the longer this goes on, I mean, we've had let's call it 3 or 4 months now of not knowing what's going to happen. If this goes on for 6 months, 12 months, without a doubt, you're going to see a big slowdown in the economy. And that's the recession scenario that us economists are worried about, where businesses just stop investing because they don't know what's going to happen in 6 or 12 months.
Rick Newman, good to see you. Thank you.
Thanks, guys.